everyone. Welcome to another episode of the Eitel Insights podcast. Like always, we seem to release these every time there's an avalanche of snow coming in. So, Dane,
we're on trend at least the last couple of times, right? So if this was a chart, we got a trend established. Hopefully,
sure.
it's the break of it.
It's another new business that Eitel Insights should be exploring. But Dane, what have you been up to the past couple of weeks?
You know what? Well, we've actually been eagerly awaiting this new data that's coming out. It's nice to see the 2020 data start to roll in, and that's what we've been looking for, and here we're going to start discussing it.
Yeah, for sure. So let's dive right in. We'll dispense with the pleasantries.
Yeah.
But what I found interesting just right before we were talking is that kind of like you were talking about, we did see a bit of a price drop in January of 2020 in the average sales price of the detached market in Greater Vancouver. So can you tell me a little bit about what happened month to month and year to year?
Yeah. So what's interesting in the January data, those that follow us and they remember the December data, was kind of an oddity, if you will. So we had a $1.670 million sales price, average sale price in December. But that was really largely due to one sale out of Pemberton that really kind of skewed their average sale prices right out of whack, and there was no other sales in that market to kind of subsidize that. So that actually had an overall effect of the Greater Vancouver market to the tune of about $100,000. So that really kind of shot it out of whack. And then, of course, this month, Pemberton is back to its normal act, and the overall market is kind of back to it. So, the January data came in at 1,590,000, which is interesting. We'll actually just toss the chart up here. So that's right in the middle of our threshold. And why that's significant is that's basically what we had tested previously to 2019. So in 2018, we were right around that 1.60 marker. Throughout 2019, we did a test 1.50, 1.48. And that was kind of what built up or summarized that year in our opinion. So what we're anticipating here going forward is some significant losses from where we are at right now in the detached market. So again, we're at 1.590. In the next quarter or so, I really would expect to see the market test the 1.40 mark, 1.480 at the very least. Where we're at right now, we're basically again at that middle threshold, and seemingly again testing that 10-year uptrend. Now, why we're testing it at a higher price point is because the 10-year uptrend is an uptrend. So previously we were testing at a 1,500,000, 1,480,000. That was time gone by. So as the chart continues to progress, so does the 10-year. It needs to establish at higher prices to remain in that 10-year. I kind of see this as the 1.50 held its ground temporarily, and the next test of that threshold, I think it will ultimately fail, and we'll see lower prices establish themselves for sure.
Okay, just to summarize a little bit, just only because there were a lot of numbers thrown out
right
there. So the average sales price for a detached house in Greater Vancouver in the month of January was $1.59 million, correct?
That's right. Yeah.
And that's roughly similar to what it was a year ago. Is that correct?
So actually, year over year, it is roughly similar. It's $40,000 less. Okay. So in January of 2019, it was $1,633,000 was the average sale price.
Okay. So a little bit lower, but effectively
we're right around there, and so that's kind of just, again, it's a lower price based on where we're at the month over month. Month over month, including all of the oddities, which of course you have to include, is actually $80,000 lower. So does that make sense that you lost $80,000 from December to January? Probably not. Even though the assessments
only because of that Pemberton.
Exactly, right. So the market's pretty much nominal from December to January.
Okay.
However, Pemberton is kind of just back to the averages, right? It doesn't skew the whole overall market average this month.
Okay, and you wouldn't be surprised to see the average sales price drop about $100,000 or so over the next quarter or more.
Absolutely more. Okay. I wouldn't be surprised to see a 1.40 test, which is $190,000 away from where we're at right now.
Right.
That being said, last year there was a significant drop from January to February. It's not unheard of to see another drop in this market coming up. That could be right around the 1.480 mark again. And really what will kind of force these prices lower is that addition of inventory. And we'll get into that later on when we deal with the inventory. But right now you're dealing with a fairly finite market that's going to really broaden. And really what we saw last year was a lot of that stress test nullified purchasing going on, but that only occurs when prices are lower. So there isn't.
Sorry to interrupt. Can you explain what stress test nullification?
We'll get into that in the sales as well. Yeah, absolutely. But that's a good point. We will talk about it.
Okay.
But yeah, so that has to actually occur when we're at stress test nullified prices. Yeah. Right now, the overall market is only down 13% from the peak.
Okay.
I don't think that we're on any recovery phase by any stretch of the imagination. I think that we have to go lower in this current market cycle. And 1.40 should be the lowest that we do go. However, not all markets are created equal, as we always say. And there's some actually areas in Greater Vancouver, in the 22 or so areas that do make up the average of Greater Vancouver, they're actually close to, or they're at their technical bottoms. Now, are they breaking out of their downtrends? No, but they're testing their lowest threshold. So technically, they are investable for a homeowner. For the investor, no, we want to see some more signals that actually start to kick in before we can say, yeah, you can exponentially invest in this X area, X, Y, or Z. And that's about how many there are. There isn't a ton of them overall out there. So what we're going to continue to see is those markets probably start to hold. However, if you've been waiting for the last couple of years to purchase, there are a few markets that are at their technical bottom. You can purchase for livable reasons because you got to buy somewhere and it's better to pay off your own mortgage than somebody else's, unless you're in an exponentially losing market. There are a few markets that have already exponentially lost, right? And so they're at their technical bottoms. You won't see a significant recovery over the next year or two, but you might be able to get into the house that you want, pay your own mortgage, and over the next 3 years, you'll see a significant recovery, right? So there are some rhyme or reason to actually start to purchase now in specific areas. And again, that's the Eitel Insights client base has the...
Okay, so you probably see this question coming a mile away, but how do people find out what those XYZ areas
are? That's something that we do. Here we don't mind dispersing the Greater Vancouver overall market movement, but clients do come with some privilege. And so that, again, you do have to contact Eitel Insights. Please visit eitelinsights.com. We've actually just featured or updated the website a bit as well, and we got a new kind of market update / blog section. So, feel free. Our monthly updates will be on there. You can tweet them out. You can, do all that kind of social media that I'm not personally the best at. Yeah. So, but yeah, that's kind of how we see the overall market going. It's still very much the majority of them are going lower longer, which again is why we still see the overall market on the average basis definitely going lower longer as well.
Mm-hmm. Okay, sounds good. So Dane, just for personal interest here, if I say a city, will you give me a nod or a head shake?
I'll give you a nod, but that's why I like podcasts. How's that?
Yeah, for sure. Yeah.
No,
so the audience.
There are the leading markets in kind of any overall place, and maybe we'll put it up to the audience. I think that we've left a few tidbits throughout all of the podcasts that maybe you could probably put a few of them together. However, there are a few that really nobody discusses in the overall market, in the investment market. Maybe that there's been some scuttlebutt or some always conjecture, if you will, about a few markets that really aren't kind of publicly talked about. There are opportunities. However, we're still not given the green light on an overall basis. Once we're kind of at that, then of course we can kind of start to divulge, but we don't want to get everybody into an uproar and start purchasing across the map, hoping that is the place. For the low investment of $250, you can get that absolute information. For the next upper level of investment for $1,500, you get monthly information. Now you can change which area you want on a monthly basis. So if you're kind of looking at two, I don't want you to have to pay out the nose. Yeah. We can include two and kind of rotate them around and figure it all out for our clients, right? And then of course the echelon goes up from there from the client level basis. And yeah, so that's how we can get into it. If you're actually, just curious about which market is one of the better ones, that can be part of the optionality on your purchase. We know on the website there's a lot of single options, right? You got to choose which market you're interested in. just choose Greater Vancouver. In the description at the low, say, you know what, we're looking for investment. Which market we're looking for? One market that you might think is a great investment, right? Now, we don't have a crystal ball. However, we kind of do at the same token, right? I mean, we've proven that this technical analysis works. Market cycles do exist throughout the history of Greater Vancouver. We've proven that across the nation, for that matter, right? So, there are some markets that are technically, personally investable for your kind of personal domicile. There's some investment mentality that if you really want to shoot from the hip, you can start investing in those those exact same markets. However, we think that we would like to see a few more indicators start to show up to actually put the no impetus of actually having home ownership in the equation to actually just see some investment monies return.
Okay, sounds good. So with that said, let's kind of go back to what we were talking about before. We were mentioning the number of sales that happened in January. So
and the stress test
and the stress test. You used the term the stress test nullification.
Right.
What does that mean, and how does that relate to the number of sales that happened in January and then year over year?
Sure. So what's interesting is, I mean, let's go with what is stress test first, and then we'll kind of break it all down, and then hopefully I'll answer it all. Okay. If I don't, let me know. Okay, I speak fast, I say a lot, but sometimes we don't answer the exact question. We just get around it.
I'm a chimpanzee, so explain it to a chimpanzee.
There we go.
For sure.
Okay, so the stress test was introduced in 2018 by a national basis, right? So it basically said, hey, here's what you could afford on a 100% basis. We're going to dock you 20%. There was really no rhyme or reason other than there's a couple of markets across Canada that are overheated, and we want to cool those down. On a national basis, it didn't really seem to make a ton of sense. The rationale that I can come up with that maybe could be good is that in theory, if you can qualify for this stress test, you're recession proof. On averages, on average, markets decline 20%. 20% is the technical definition of a recession. So, it kind of mitigates you that you're not purchasing through the nose, and if anything goes wrong, that you're really extremely punished. So, they're trying to protect you from yourself in a certain essence. I personally don't think that's the government's job, but that's neither here nor there. It is what it is, right?
Sorry, Dane, to interrupt you again.
Sure.
So just from my understanding, so previously, if you qualified for, say, $100 mortgage,
right,
the government said no.
Now it's 80.
Now it's 80. Okay.
Absolutely. Okay. And I mean the quality. You got the same job, you got everything, and from 2017 November you qualified for $100, and then you say you didn't go in November and you went in March of 2018, you qualified for $80.
Okay.
So it's not ideal to the market, right?
Yeah.
So basically that did have the ripple effect. And what's interesting, you heard from the previous chief economist at the real estate board that the stress test is over, that we're used to it. It's 3 months in, everyone's okay, we're understanding what it is, and we've moved on past it. That's an impossibility. Kind of maybe consequently he's no longer the chief economist there anymore. Like it just didn't pass the smell test. It just didn't stand to reason that was okay all of a sudden. 20% 3 months later, 6 months later, however long you want it. It actually has to come down 20% or so, right? You got to save a bit over the course of 2 years,
right? And
that's basically what we saw in 2019. And that actually I'll attribute back here. Hopefully I'll stay on a similar track to the assessments in what you saw in 2019. Some markets lost 10% and more, and like substantial losses from their year over year on 2019. Now that's simply because there was no sales in 2018. That's when the stress test was actually introduced. So it was really a shock value. You couldn't afford in 2018. That's why there was pent up demand in 2019, because you basically had zero sales. And that's why all the horrible numbers were reported in 2018. And then 2019 were touted as amazing sales, because you basically doubled the sales from the year previous. Right. Well, the year previous they couldn't purchase, right. And the year after in 2019 prices were down enough that stress test was mitigated. Yeah. We were down 15 to 18%. You did have some savings, and not everybody purchased, because not everybody wants to purchase anymore. They want to see further losses. They want to see more further reasoning as to why to purchase. But there was a segment of the market that was really pent up demand. Right. And they unloaded, you know what I mean? So the end of 2019, you saw a significant amount of purchasing, and even in the first quarter. And that's why you saw a lot of erosion of equity in the assessments. The assessments were basically taken at the 2019 summer market. Yeah. 2018 summer market had no comparable sales other than 2017. So you didn't see any change in 2019's assessment. In 2020's assessment, you see the change because there was actually some sales that occurred in 2019. Right. And that's basically stress test mitigation or nullification. Okay. So now to get where we are right now, we'll just toss the chart up. So the sales in January 2020 were at 444. Not great by any stretch.
444 sales in Greater Vancouver.
In Greater Vancouver in the overall market, which is down from the previous month of 605, which is roughly where I actually believe or would have anticipated the market holding. We did go below this, what I perceive to be the new market cycle. However, we did hit a newer high or a higher high than the previous year in January, right? So I think we're kind of establishing more of a staunch uptrend that will, the next January in 2021 will be higher than the January in 2020, and so on until we actually start to see a reversal of this market. We're not there yet. We're inching closer. I mean, and that's the kind of thing. We've been negative on this market for a long, long time, and we're still negative on it overall. However, there are a few gems that we're actually starting to be very positive on, and as the months and as the years go by, we're going to be extremely positive on Greater Vancouver. That's how we believe this market's starting out. We're at 344 January 2019 of total sales in the detached market. Now we're at 444. Is it great? No. Is it horrible? No. It's a heartbeat. You know what I mean? So, and when we get into the inventory, we'll kind of see why it's only 444. We did see a lot of erosion of the inventory and so on and so forth. So there was harder to find a good buyable or purchasable property. It has to meet the mark of a certain price and then still a certain quality, for a purchaser. They're keenly aware that maybe the media hype of an 88% increase in sales wasn't really true, because in their own mind, they remember how bad 2018 was, right? Yeah. So that's kind of the interesting factor. Again, does it pass the smell test? Not a lot of it does. And even this month, now we're starting to see the real spin around between, it doesn't matter about year-over-year sales increase or sales decrease. It's actually still in a tight range of the HPI. It's like, holy smokes. So can we stick with one?
Sorry, what's HPI? Yeah.
The housing price index, which is 2/3 of absolutely nothing. It's the average, or it's the house price index of a sales price. We've mentioned it before. It's basically known as the benchmark price. So instead of using average sale price or even median sale price, the Greater Vancouver Board likes to release this HPI price, this benchmark price, which is a convoluted factors that basically try to mimic the CPI, the Consumer Price Index. So they take a whole swath of information and say that's the housing market.
Okay.
Well, you've basically watered it down to not be the housing market anymore and just kind of showing a smooth line. Okay. So they're saying that hasn't moved, but don't, just kind of divert your eyes from what we were talking about last month that was so great, which was the sales. It's okay that this month was bad, so it's just interesting how the spin and the spin and the spin goes. Where our followers, our audience, our followers, and even our detractors, at least we stay consistent, right? We speak on the same stuff. We show you the same charts, and
use the same metrics.
And you know what? They're continually going the negative position, right? We would love to say that everyone's going to be a millionaire overnight. They will be millionaires. However, the time is still upcoming, right? Okay. There's going to be a perfect time to invest and make a ton of money here in Greater Vancouver. However, we don't think it's here yet. Is there a few markets that you can purchase rather than paying off rent? Absolutely. There's a few and far between. Are we at the place where you can just cookie cutter buy anything and then see a significant investment in 2 or 3 years? Absolutely not. We're not there yet.
Okay. Yeah. Let's move on to the inventory, just because usually they're inextricably linked to the sales numbers. So, what happened with inventory in January?
So, inventory bounced up from the really kind of abysmal numbers of December. So we really have fallen off a cliff. We'll just toss the chart up here so everybody can see what we're talking about. And we've fallen off a cliff basically at the end of 2019 for inventory. I don't really see that as demand just eroding it to a frenzied capacity. And I think we've kind of proven that with the previous chart. Yeah. Our highs in that previous chart was 950 sales. That's not frenzied mentality. Far from the days of, north of 2,000 sales or even north of 1,500 sales in a given month, right? That's frenzied. This is not, right? So I don't think that it was frenzied activity that was eroding the inventory. I think it was really sellers fatigue and people saying, you know what, I haven't sold for a long time. I'm going to enjoy this Christmas. I'm going to reevaluate. Yeah. Maybe I'm going to change the realtor, somebody that, you know what, I even think that the homeowner is kind of sick of, I can get you the highest number. If they want to sell, they actually want to sell now. You know what I mean?
Yeah.
They don't want that extra 10 grand. They want a realtor that says, the market's not great, but I'm going to do my best. And as long as we appropriately list this property, we're going to attract a certain amount of buyers. There's not the amount of buyers that there used to be. So we do have to be fairly attractive, especially to differentiate our listing from the mammoth amount of listings that are still oncoming. I mean, we are at a low. So if you want to sell and differentiate and get out of this, what we perceive to be a further negative market, now is an opportunity. There's no inventory. As we prescribed last year, that the prices were down. Hey, there's an opportunity here to sell. If you're interested in selling, take your first loss as your best loss and you'll be able to sell. Well, what happened? Prices rose up. I mean, there was a lot of sales activity because we were at that price point. Yeah. So this is another opportunity to take advantage of. If you're thinking about selling, get in touch with Eitel Insights. Get in touch with one of the Eitel Insights preferred realtors. If you don't know who they are, again, get in touch with us. We'll refer you out. And they'll list your property with your best interest in mind. It's not that they don't want the quick sale. You do, especially after being on the market for 6-8 months and then eventually going off because you just didn't have any showings and there was, that promise of the extra 10 grand just really never showed up. And again, still, we'll say your first loss is your best loss, unless you're in a few of these markets. Maybe you are, and you don't need to see some further price losses. Again, get in touch with us, and we'll take care of you, right? Okay. So the actionable intelligence that we really offer this month is really great, and it will continue to be over the next couple of years as this market gets really close to changing in a positive direction, as opposed to when we were kind of new kids on the block, and we're saying it's changing in a negative direction. Just so happens we are correct.
Okay. And last kind of data point we want to talk about are days on market.
It's your favorite.
Yeah, exactly. Just before we get started, would it be fair to say, without me knowing any of the data, given the headwinds that are facing the market, that days on market are probably up?
That's right, buddy.
All right. Yeah, I'm learning.
You're learning. You got it. You're a follower.
That's right.
So what's interesting about the chart? We'll actually just toss that up here for you. And it's at 69 days on market, which is the highest that it's been since January of 2014. Pre-market hotness, pre-frenzied activity, pre-everything, right? So that kind of shows you that maybe we're in this pre-market horribleness, right? Like it is an indicator. I mean, do I anticipate it to go to 75 in summertime and over spring? No. I mean, there is still that seasonality that we've spoken about in the last couple of podcasts, about the seasonal December numbers. You will have seasonal spring and summertime numbers. Well, what is seasonal in there? Seasonal is more inventory, more sales historically than the Christmas months, the winter months. However, the amount of inventory doesn't nullify or doesn't get nullified by the amount of new purchasing going on these upcoming years. So you're going to see that ever increase of overall inventory and then your haves and your have-nots of the market, the acceptable purchase prices and the ones that are just, they're listed too high again, right? And you're going to have to chase the market lower. But again, you will see the average days on market of a saleable property probably lower over the next quarter or two. Again, why we would say there's an opportunity here to sell. Rather than, again, we don't want probably too many people to be buying on a mass basis. However, if you want to be selling, now is your opportunity rather than the next couple of years. Again, seriously, we've been right in the past. We're not going to be wrong this time. We do a lot of homework here. That's why we do speak authoritatively, and the track record shows it, right? So the days on market will go down just because the sellable one, there will be a few that sell in 2 weeks. And then there still will be the one that has the ongoing negotiations and sells in 70 days after, that buyer comes back for the 5th, 6th time, right? So it is a process. The good news is there will be new buyers out as spring brings them. However, they're going to have an abundance of inventory as we get closer into summer. So if you want to capture those kind of new buyers, list it now. Don't wait till the competition is at its peak again in summertime when we probably see, north of 6,000 active listings compared to where we're at right now, which is sub 4,000, 3,900. Why wait? You know what I mean? Like, take advantage of this opportunity rather than we saying, your wife saying, "We told you so," right? You should have listened to Eitel Insights.
Your wife or husband. Right?
That's right.
So just before we wrap this up, I think it's really cool that there's an opportunity for any of our listeners to meet with you directly. So tell us a little bit more. You're going to be this weekend at the 2020 World Outlook Financial Conference at the Westin Bayshore. So
that's right.
Right before we sign off, can you tell us a little bit about what that conference is all about and how people can get in touch with you while you're there?
Yeah, I mean we'll be around. It's a 2-day conference. Michael Campbell's Money Talks actually puts it on. It's the World Outlook Conference here in Greater Vancouver. It's one of the biggest financial kind of spectacles. Unfortunately, if you haven't got tickets, it's actually already sold out. They do always sell out.
Can people get in touch with you like outside the conference if they
absolutely
email you in advance?
Again, yeah, get in touch with us through eitelinsights.com, and we'd be happy to arrange something if you're in the downtown core. But yeah, it's really interesting conference. You do have the different financial sectors. There's the real estate, there's the stock market, and that should be a pretty heated debate kind of going on back and forth, especially where that market is right now. So, but yeah, excited, can't wait to go. And again, that's February 7th and 8th at the Westin. So if you got tickets, make yourself known, shoot me an email, let me know that you'll be there, and we'll definitely make some time to get in touch. Okay,
and the email is dane@eitelinsights.com. We ran a little bit over today, but hopefully you found the information informative. Hopefully you found everything informative, and if you did, please make sure you give us the thumbs up, smash that subscribe button, and we'll see you on the next one.